Sequence. We're here. We made it. We're almost all the way there. So what do you think of the sequence thing? What do you think of sequence as what makes sequence different than what we've left and what we're going to? Why? Like, what are we going to do with sequence that's going to make it different than any other experience?
I think the branding freedom we have is really great. We can do whatever ideas we have. We can move forward with them right away and get things done. We have this, in my opinion, world-class processing team that has come with us, and they're going to take everything we have, absorb that, and then come up with the ideas to elevate it and just be able to service our clients. I think we already do a great job servicing our clients, but to be able to have the freedom to have our own brand, to service them to the utmost level, that's what I'm excited about.
What do you think about sequence?
Yeah, no, I agree. I think it's bold, it's refreshing. Like Aliya alluded to, we brought our processing team with us, and while our clients never get to see what's going on with our processing team, we do. And in the end, the clients always think, oh my gosh, this mortgage process was so simple and so easy. And it's not only because of us, but it's because of our processing team and having that teamwork behind the scenes working so it looks so flawless to the clients.
Right. I think that's I've been thinking a lot about the name of Sequence and kind of like the logo and what it all, we had an intention of what it was going to mean and what it's going to turn into in the future. And it's one of those, the sequence of events is not only for the clients, but it's also for our loan officers, our support staff, the processors, the loan officer assistants, and anyone that we might hire in the future. A predictable, all we want as loan officers is a predictable path. Help us just get the clients in queue, and then we know who's going to do what and when, and at the end it winds up being a easier process for us as loan originators and for the clients, and helps us stay in that time where we are helping our clients the most and not chasing down paperwork and not filling out forms and not doing all these things that take up time that are necessary functions, but we got the sequence down. That's kind of one of the ways I'm thinking about how are we going to take the sequence name, the sequence brand, and all these other things and turn it into a story, because it's a name and it's a cool logo and it's great, but it's kind of up to us to create the messaging. So I'm curious to see. I'll be curious to see how that evolves over time.
I like that. We're so in control of this team, and we have the people here to make this brand exactly what we want it to be. It's the right set of people. We're bringing on the right teams that can take on this brand and live up to the name of it.
Right. And I think it's very important that we maintain that culture, that belief that we do business in the same way, that if I don't do a good job on a file, it impacts Eric and Eric's clients. And I don't want that to happen because, the same thing. I want him to do a really good job on his files so that our support team can fast track files when they need to. They can give the files the time and attention. And if my past experience is that if we have loan officers that aren't doing the full job that they need to do, that someone else has to pick up that work, and that impacts your file flow and yours and mine and so on. So having that level of expectation and standard and belief that you want to do a good job because it's the right thing to do, it's how you operate, and attracting those people who believe that same thing, and then putting them into that system that really works and helping their careers accelerate.
Yeah, it's a big deal.
Yeah.
Do you have any fun?
We have fun.
I think we have fun.
I mean, I enjoy everyone that we work with. I think that people, the people who are here are the ones that really get it. That are the ones who believe what we believe, and we have fun together. We joke around and have lunch and talk, and we have fun banter in the office. But it's it's interesting because you work primarily remotely, right? You have a desk rental and work from home and work from the campsites and from the ski slopes and from wherever else you are, from the pickleball court. But having that culture that when you walk in the door, the intent is for it to be this is a great place to be. And it's fun and it's exciting and we like it here and so on.
Yeah, for me, fun is it's a combination. Part of it is rewarding, right? So working with clients, the rewards are seeing how smooth of a transaction and process it is for them to get what they want, and seeing the excitement on their face and hear it in their voice on the phone conversations, and knowing how smooth that is, and that having such a great team and all the tools and technologies that we have makes it a very smooth transaction, not only for the clients, but for me. And that's how I end up having fun. It's not fun when things are falling apart and stressful, and that's not what I'm experiencing. So, that's the fun part for me, is just that it's smooth for me, which makes it smooth for my clients.
And then they get to the finish line where they own a home and it's exciting for them. And
That text we got yesterday.
Totally. We got tagged in a post on social and a text from a client that they're just like, this was not possible without you. We were turned away, that we couldn't do it, and all of a sudden we own a home, and like it's a place for them to raise a family. And
So that's rewarding and fun, for sure.
And that was a situation where we absolutely lived up to the Sequence brand. They were thinking they weren't gonna buy for another 6 months, and we said, well, let's get you in this position you are today, get your realtor out with you looking at the price point you're at now, not where you plan to be 6 months from now. And what was it, 2 weeks later, they found the perfect spot.
Yeah, I think that, speaking to more of that, that's the, I think over time what we'll see is that Sequence takes on meanings to different people, right? To different parts of the home buying experience. And for us to be intentional about, there is a pattern that we go through with every client. And maybe people I don't think people realize it necessarily, but I want to bring it to light and be like, we start with a full pre-approval. We're not going to give you a back of the napkin. We're going to do a full financial analysis on you and make sure that you know where the ins and outs are going, and you understand how this process is going to work, and you know what the payment's going to be, and the cash to close is going to be. And we're going to talk all about those things, the entire process from start to finish, so that you can anticipate what's coming next. And it's not a surprise to you when we're talking about inspections and earnest money and all these other things, because we've walked you through that in a digestible way. So you want to talk about first-time home buyers and what you're experiencing there. Right?
Yeah, I mean, that goes back to rewarding, how rewarding it is with first-time home buyers. But I have such empathy for them right now. They've been hit so many times now. The first-time home buyer in the last few years has seen dramatic price increases in homes, and now they're starting to see their 401ks and retirement accounts decreasing in value, and now interest rates are rising, and it creates a lot of depredation for them to, do I really want to get into this realm? Do I really want to own my own home? And for first-time home buyers, we're here to hold their hand, and my answer to them, if they ask, is now the right time, is yes, now is definitely the right time. It's not the best time, but it's the right time. Mortgage rates are projected to rise. There's still a housing shortage. You're not going to see a huge decrease in home prices. Get in now. Get in with a 30-year fixed. It's your home. It's where you're going to live. It's where you're going to raise a family. And if interest rates go down, then we will refinance you and lower your payments. But the projection is, if you wait, the payments are going to be higher in the future than they are now. So let's get you in now, and if things turn around and they get better, then we refinance you, get you more money in your pocket. But most importantly, you've reached that American dream. You have a home, someplace that you live that's safe, secure, and that you're going to live for a long time. So
hit that one more time in a 30-second version.
Which part?
The first-time home buyer. That was really, really great. Hit it one more time. There's a lot there. No, but hit it again. Hit it with that 30-second consolidated.
I don't know if you can do that in 30 seconds.
You can. Hit it again.
Do it, try it. Ready, go.
All right. For first-time home buyers that are really concerned about, is now the best time or the right time, and absolutely now is the right time for sure. Interest rates are projected to increase. There's still a housing shortage. Home prices are not going to go down very much over time because it's a supply and demand market. That's not changing. So let's get you into your American dream of owning a home, a safe place to live. And if things get better over time with interest rates, then we'll refinance you and get you more money in your pocket and make things more secure for you. But for now, let's get you there, get your housing price fixed, so that way it's not going up in the future.
40 seconds.
That was great. That was great.
I think like one of the main things that I think about for a first-time home buyer is, like we've all been first-time home buyers, and not once have I thought to myself, man, I wish we wouldn't have done that. I wish we would have done that earlier. I wish we would have pumped the gas earlier, because now looking back on it, it's really scary that, first mortgage payment that Dan put me into before I was in this industry, it was a stretch for us. It was a lot more than we were paying for rent. We've refinanced twice since then. We couldn't rent a studio apartment for our mortgage payment. And so just like thinking back on, wow, I'm glad we did it when we did it. And, I wish we would have done it sooner, so we could be buying an investment property now.
It's really good. Like when we bought our first house, it was literally every penny that we had. We did an FHA loan. It was 2012, and I think household income was maybe pushing six figures, like between the both of us. And the payment was more money than I'd ever thought to spend on a monthly basis. But we just knew it was the right thing to do. And so we've created wealth there. Like we would not be in the overall financial picture that we're in now. Like we bought that house, we refinanced it, it appreciated in value. We took cash out of it when we bought our new house for the down payment on our new house, and now both of these houses have appreciated in value substantially. If that one decision, if we decided it's too much, we're scared, we can't do it, we wouldn't have either of the homes that we own now. We wouldn't have the stability that we have in our finances, and we were no more prepared than anyone else. Like I liquidated an IRA, and like every penny out of our checking and savings account. Like we didn't have enough money to make the next mortgage payment. Like we were that thin on cash, and we didn't have cable, we didn't have a TV. Like we just got bare bones because we knew that it was the right thing to do, and I'm so glad that we did.
It's interesting. I stay in touch with a lot of my first-time home buyers, right? And we have the conversations. I'm like, hey, now that you've been in your home for 6 months and 12 months, is it as hard financially as you thought it would be? And it's the same answer for every client. It's like, no, it's much easier than we ever anticipated. No, we're not eating sack lunches every day. We can still go out to dinner. And then I take that information when I'm working with new first home buyers that are still thinking about getting into buying their first home. I'll explain to them, look, you have a lot of friends that have recently bought homes in the last year. Ask them if it's still as financially hard as they thought it was going to be. Is it when you're first looking at these numbers? Because they're big numbers when you first look at them. They're scary numbers. And they go and they talk to their friends and their family, and their friends and families tell them the same thing. No, it's much easier than we anticipated. It's not as tight, and we're so glad we did it.
Yeah, I think it's one of those things where goldfish grow to the size of the bowl. Right, so like if you have a bigger housing payment and you make that first, like whatever's left, like okay, that's what you're going to spend. If you have rent that's a fraction of that, half of that, whatever's left, you're going to spend it. You're going to find a way to do it. It's just your buying preferences and your buying habits change, and that's probably a healthy thing because you're prioritizing, your home, your place, and having that security. And one of the scariest things to me is renters have no guarantee that they're going to be able to stay in that home, and like you have a family and you have you're trying to establish roots, and then someone can say, I'm selling this house and you've got 60 days to get out of here. We have clients that finally bought earlier this year, and I think they had that where tenants and the owner is selling scenario happened to them like 4 times in 2 years. Jeez. So wherever they moved, the owner was like, we're gonna sell the house, and you got 60 days to get out. And so then they find a new place. They move and they, change their children's scenario, and they've got 2 kids and this whole deal. And they finally were like, we literally can't do this anymore. This is too much. Now they've got a house that they own that's theirs, and now they never have to do that again. It creates that stable foundation for their family.
Yeah. And it's the seesaw effect, right? So as home prices go up, rents go up, and then home prices come down a little, and it keeps going back and forth. The question is, where do you want to put your money? And if you're a homeowner, you're putting it back into your own pocket. Right. And if you're a renter, it's never going to your pocket.
And I'll tell you who's not worried.
One penny.
Tell you who's not worried about current interest rates? People who bought a year ago that are sitting under 3%, and they're going, yep, inflation is happening. and rent's going up, but my mortgage payment is fixed. Especially in California, your property taxes are also fixed.
I just got a text last week that was from a borrower that we had a year or two ago. And all it said was, man, my 2.9% interest rate is looking really good right now.
And I think in context, a 5% interest rate that will feel the same a few years from now when maybe the
Absolutely.
normal rate is 8%. I'm not sure what the future holds, but that I think that's going to be true into the future. And to what you're saying earlier, if rates go down, you have a team of people that are professionally managing your debt, and we're going to be here to watch the rates and to call you proactively and go, it's time, let's go. I need a pay stub, I need a mortgage statement, and your whatever, here's an update your file, and let's hit the road. And we're going to take you from here.
I mean, I remember back when I had a full head of hair and I bought my first home.
That was a long time ago.
It was a long time ago now. My interest rate was 11%, and as rates continued to go down, my equity grew in my home. I was able to sell that home, buy another home, get a lower interest rate, et cetera, et cetera. I've refinanced, several homes over time, and in the long run, I've gained a lot of equity and I've saved a lot of money, and at least I got my foot in the door. And without getting your foot in the door, you're not playing the game.
That's why you get to work from the golf course now.
That's exactly right.
So let's
that
hit
and modern technology.
let's hit. So strategic refinances. I think that's good. So what does that mean to you, and how do you help your clients with the strategic refinance?
So part of what we do every day at Sequence is keep an eye on our clients' overall financial well-being in their home. So we not only will reach out to them to refinance when rates go down, but also looking at, have property values gone up? Can we drop your mortgage insurance? We put you on a credit repair path when we started your home buying process. How's that path looking? Has your credit score increased? Can we get you a better rate because of that? Or did you buy on a FHA loan and now you've gotten a raise, improved your credit, and we can get you into a conventional loan, maybe still have mortgage insurance, but have it at a much lower premium. So we're always watching for that. We keep our clients on rate watch, as well as a check-in every 6 to 12 months, maybe even more for people that we know we're on a credit repair journey, just to always make sure they're in the best mortgage they can be in for them at that time and into the future.
One of the exciting things at Sequence Mortgage is that we don't just complete the transaction and we leave the client alone, is that we're constantly monitoring their situation, whether or not they've gained equity, whether they can drop the mortgage insurance, whether or not they can refinance to a lower rate, or they can consolidate debt all into a refinance. So we don't just leave the client at the door. We continue to follow their path through home ownership and through their loan, and monitoring rates, monitoring credit scores, values, to see if we can go ahead and make a strategic refinance to save them money and put more money in their pocket, which allows them to also put more money into investments if they want, or into starting to save for college educations and things like that.
What do you want to talk about with buy-down strategies?
I think one of the great things about Sequence is we are advisors. We're not just going to quote you a par rate and send you on your way to go shopping. We're going to look at your overall finances and decide what's most important here. Most lenders will say, here's the 20% down rate, here's what your down payment and closing costs will be, go ahead, find a house. We're going to talk about, okay, you plan on putting 20% down and that's your max out of pocket. What happens if we put 15% down, take on a tiny bit of mortgage insurance, buy down your rate, and therefore keep your closing costs either the same, maybe a little bit less, and make your monthly payment much more manageable. So we're going to look at that, to begin with, we'll give you those scenarios, and then we'll also look at it if you're making, if you have to make multiple offers, we'll look at it on every offer we make. Here's what we can do, and here are the 3 or 4 different strategies to shuffle the deck and get your money where you want it to be, so you have an overall strategy that works for you on a monthly basis into the future.
I think at Sequence Mortgage, one of the things as mortgage advisors is that we're able to provide financial advice for the whole picture in regards to how to save money, how to put money towards a house, and those go into a sequence. So I work with several buyers that what they're doing right now is they're borrowing money from their 401k. So yesterday, their 401k just lost almost 5% of value. And what we have some of our clients doing is taking money out of their 401k, they take a loan, they're paying it back at 3% interest, so they haven't lost money on the money, they haven't lost any value on the funds that they're borrowing. They're paying themselves back at 3%, and then they're using those funds to either pay points on a loan so they get a lower mortgage rate, or be able to use it for a down payment to pay for a home. As a mortgage advisor, we're going to talk to you and get your whole financial picture to figure out what's going to work best for you in your scenario, and everybody's different.
I think, we're in this season of first-time buyers right now. And with that, something we do differently that most other lenders don't do is, first-time buyers, they're typically like around our age, they're starting their lives, they might be getting married, starting a family, something like that. One thing we always do is say, okay, you're looking to buy this house with those 4 bedrooms. Are you planning on starting a family? If so, what's the timeline for that? When that happens, is one of you cutting back at work or staying home? If so, let's take that into consideration. Look at 1 1/4 of your salaries rather than 2 full salaries, and make sure that this mortgage payment fits into your lives not only today, but when you grow your family and things might shift around and your income changes.
It's really good advice. I think that's something that most people miss, is they just take them to the limit and go, you're both making 200 grand, throw you into this big old loan, but then like what happens when if you do decide to have kids? Obviously we're not going to not qualify you if you want to take on that big payment, and you're going to figure that out, but it's a good advice. It's one thing that we do that makes us different than other people who can also make mortgage loans. There's no shortage of people who can make you a loan. You want to work with people who are actually going to take the time to advise you and actually understand your situation, and then help you make a decision, guide you down the path and say, tell me the variables so I can understand where you are, and then let's look at some potential outcomes and some potential options, and then you, Mr. and Mrs. Client, can make the decision that's best for you and your situation and what you feel. It's not a one-size-fits-all, everyone gets this one product thing. I think that's important differentiator.
I think also, one of the things with the culture here at Sequence Mortgage, and I know it because I can say for not just the 3 of us, but the rest of us, is that unlike a bank where we have hours that are Monday through Friday from 9 to 5, we're here, and I know you guys are too, 7 days a week in the evenings. I probably spend more time talking to clients in the evenings and weekends than I do during the week, because they're busy and they're working, and I need to be available when they're available.
That's exactly it.
And I think that's important.
We meet the clients where they are.
Yep.
Right? Where are the clients? The clients are using their phones, they're busy working, and they're available in the evenings and weekends to really, really put their heads into this big financial decision. People are busy, and so our day job is to get the loans through and help people with that process. And then our part-time evening and weekend job is to talk to our new clients and help them strategize and be ready to make offers and write pre-approval letters and run those numbers and do that consulting. And it happens around the clock, because that's where the clients are. And sometimes I might be up late and I'll get an email or a text from a client. Last night, actually, I talked to a client, I texted with a client like 11 o'clock. I happened to be awake. She had a question, and I was like, yep, this is part of what we do. It's a lifestyle. You're kind of in it all the time.
Yeah, I think we talk about our team a lot, and that's what's so valuable about having a team. I know you and I partner a lot on our work, and one of us is always available to service the client, and that's a huge deal to be, on a Saturday night. You got that call at 11 p.m. last night. You texted me at 7:30 this morning and said, when are you in the office? And I said, I'm walking in the door right now. Great. We had something come in from that client, and we needed a late night decision and an early morning action, and it was able to get done.
Sure does. It does get done. Someone's got to actually do the work on dropping off the kids and doing all the life stuff.
One of the things we really enjoy working with is all of our other partners. So those include realtors, CPAs, financial advisors. Again, it's that total package of working with our clients. I know recently I'm working with realtors and helping them understand how to write an offer where they're getting seller credits, and then the clients are using those seller credits to pay points and get their mortgage interest rate lower and their mortgage payments lower. Same thing with working with CPAs and financial advisors and real estate holdings and their home is all part of that package of what they're building for in the future. So someone asked me earlier what's fun. It's fun working with those partners and helping those clients accomplish their goals.
I think that loan officers right now that are relying solely on realtors are going to suffer in the future, because that is a very important part of our business. But those other partners, those financial advisors and the CPAs and other folks that are real estate adjacent are the ones who are going to be able to help you grow even in down markets, because they're looking at different clients, they have different needs. Like the financial advisor and trust attorneys and those types of folks, they have different business needs. The divorce attorneys have a different need than, it's not rate driven, right? That's an emotional family thing that's happening, the passing of a loved one, and there has to be some type of transaction that happens for the heirs to either sell that property or one of them wants to keep it and refinance it and keep it as their primary residence. Happens all the time, and no market condition, no interest rate is going to stop that from happening. So when you have those partners and you take care of them and you know how to speak their language, you'll have a business that will run for a long, long time. Yeah. So, I think one thing that I'll be focusing on in the future is helping each of our loan officers identify those niche markets beyond, like everyone needs past clients. Everybody needs current realtor referral partners, and then probably some type of direct to consumer outreach that they're doing to find the consumers before they get into some realtor's ecosystem, right? In addition to that, some specialty that they do, that they know how to talk to a probate attorney, or they know how to talk to a divorce attorney, or some type of business affinity, or something that makes them unique, that they can go talk to a small, specific group of people and speak with authority to them about how they can help them achieve their financial and mortgage and house goals. That goes beyond picking up the phone when a realtor calls. The interesting thing is that most lenders don't pick up the call when a realtor calls. Like, that's basic stuff, and they don't even return the phone call or do the communication plan and keep them in the loop. So we're already way ahead than most people in the industry, but I think the culture that we have created at Sequence is that we're here to help one another and let me help you, teach you about this thing that I know so that you can grow. Because if you grow, that helps me, that helps the other loan officers, it helps our ops staff to see more things, and we're all here because we're interested in helping each other learn and grow. And we all bring different expertise. Eric has been in the lending industry a lot longer than I have. I learn a lot from him when we talk. And I have a different expertise because I come from a commercial banking background and I look at things differently. You also have the real estate brokerage that your wife owns, and you see the real estate world differently than I do because of that experience of working so closely with her. And it's important that the culture that we create here is one that is supportive and one that helps each other grow. That it's not, we're competing with each other. I've not seen that here. That doesn't happen. It's, if you've got a realtor, even if we're working with the same realtor, if you've got the better relationship and partnership, how do I help you build that relationship so you get all of their business and you can be their true partner? And I'll take a step aside, right? Because if they're a better match, I want you to have that. I don't want to be in the way of you really locking that in, because you all know how it feels to have that relationship where you're just totally in sync with that realtor and everything is easy. And it's frictionless, and you enjoy working with them, and they have the right type of clients that you enjoy working with. There's nothing better than that. So how do we help each other find those types of relationships and help build those? Because overall, that's the culture that we're creating, is supportive, complementary, and we're here to help each other grow and learn and be better overall professionals. That benefits everyone involved.
That's what makes it fun.
That's what makes it fun. So.